Introduction to Final Accounts. Final accounts are the last step in the accounting cycle. They summarize the financial performance and position of a business for a particular accounting period. The preparation of these accounts ensures transparency, aids decision-making, and helps in fulfilling statutory and regulatory requirements. The primary components of final accounts are trading account, profit and loss account, balance sheet. These are typically prepared after adjustments for depreciation, accruals, prepayments, and provisions. Objectives of final accounts: to determine gross profit or loss and net profit or loss, to ascertain the financial position of the business, to ensure compliance with financial reporting standards, to serve as a basis for taxation and dividend declaration, to provide insights for strategic planning and investment decisions. Trading account. The trading account determines the gross profit or gross loss by comparing net sales with the cost of goods sold, COGS. Format of trading account. We will be using particulars, amount, naira, particulars, and amount, naira. Note: insert the table correctly. 1. Opening stock. X sales. X 2. Add purchases. X 3. Less returns inwards. X 4. Less returns outwards. X closing stock. X 5. Add direct expenses, e.g. wages, carriage inward, 4006. Cost of goods sold. X gross profit CD, if any. X 7. Total X total X. Profit and loss account. The profit and loss account shows net profit or net loss after considering all operating and non-operating incomes and expenses. Key items: operating expenses, rent, salaries, insurance, depreciation, bad debts, provisions, incomes, commission, interest received. Format of profit and loss account. We will also be using particulars, amount, naira, particulars, and amount, naira, in our table for today. 1. Salaries and wages, XXXXX. 2. Gross profit BD, XXXXX. 3. Rent and rates, XXXX. Commission received, XXXX. 4. Depreciation, XXXX. Interest received, XXXX. 5. Bad debts, 40,000. Net profit CD or loss, 40,000. 6. Total 4,440, total 4,440. Balance sheet. The balance sheet presents a snapshot of the business's financial position at a given date. It lists assets, liabilities, and capital. Format of balance sheet. A. Assets. Fixed assets. Land, buildings, equipment, less depreciation. Current assets. Cash, debtors, inventory, prepaid expenses. B. Liabilities. Long-term liabilities. Loans, debentures. Current liabilities. Creditors, accrued expenses. C. Capital. Owner's equity, capital plus net profit minus drawings. Example. In our example, we will be using liabilities naira and assets naira in a table. 1. Capital 4,000, fixed assets 4,000. 2. Add net profit 4,000 less. Depreciation 4,000. 3. Less drawings 4,000. Current assets 4,000. 4. Creditors 4,000 closing stock. XXXX 5. Accruals XXXX. Prepaid expenses XXXX 6. Total 4,440. Total 4,440. Adjustments in final accounts. Adjustments ensure that revenues and expenses are recognized in the correct accounting period, in line with the accrual concept and matching principle. 1. Outstanding expenses. Accrued expenses. Expenses incurred but not yet paid. Adjustment. Add to respective expense in P&L show as current liability in balance sheet 2. Prepaid expenses paid in advance. Adjustment. Deduct from expense in P&L show as current asset. 3. Accrued income earned but not yet received. Adjustment. Add to income in P&L show as current asset. 4. Unearned income received in advance. Adjustment. Deduct from income in P&L show as current liability. 5. Depreciation. Non-cash expense reducing the value of assets. Adjustment. Charge in P&L. Reduce from asset in balance sheet. 6th. Provision for doubtful debts. expected loss from uncollected receivables. Adjustment. Charge in P&L. Reduce from debtors in balance sheet. Closing entries in final accounts. To close temporary accounts and transfer balances to permanent accounts. Examples: Dr. Trading AC Kia. Opening stock, purchases, wages. Dr. Sales. Crescent Trading AC. Dr. Profit and Loss account. Crescent Expenses. Dr. Incomes. Crescent Profit and Loss account. Dr. Profit and Loss account. Crescent Capital AC. Net profit transfer. Final accounts of sole proprietorship versus companies. In this course, we will be using basis sole proprietor and company in our table. 1. Capital owner's capital share. Capital 2. Drawings yes no. 3. Financial statements. Trading, P&L, balance sheet. P&L, balance sheet, cash flow, statement of changes in equity. 4. Regulatory framework. Not strictly regulated must comply with IFRS. Common errors in final accounts. Not adjusting for accrued or prepaid items. Misclassification of capital and revenue expenditure. Incorrect depreciation treatment. Omission of closing stock. Errors in balancing accounts. Summary. Final accounts provide the conclusive financial picture of a business. Proper adjustments ensure that these accounts present a true and fair view. Understanding how to prepare and interpret final accounts is a fundamental skill in accounting and business decision making.